Hello, Maverick traders. Welcome out to your market roundup for April 26, 2022. Corey here with you. As always, a quick reminder to make sure you follow your trading plan. Very volatile last few sessions. I mean, the markets have made a definitive move to the downside out of the consolidation that we had been in, and it's a solid break. Now you're running the risk of kind of some exhaustion, kind of capitulation, short-term bottoms, but that won't be likely the bottom. They'll just be little short-term rally areas. When you see this big of a flush, you'll often have really big size bounce backs as well, but they'll be very short-lived. I mean, it'll be 1 day and 2 day rallies, and then they head back down. So let's try to make sense of this together as we look at markets in just a very, very steep decline. So a few things happening fundamentally. We're probably near peak inflation. I think we'll start to see inflation rates go back down. Now you wonder, well, is that good for stocks? Not necessarily, because 8.5% to 7 is still not good inflation numbers, but we're probably around the peaks in the near term. Markets have broken out of what was a consolidation zone. We'll look at those charts. The Nasdaq continues to underperform. You can see here, as far as the daily performance, the Nasdaq with the deepest red, the S&P and the Russell 2000 about the same. The Dow a little bit of a leader, but they're all ugly. Oil up today, gold up slightly. US dollar's been on a big run higher. It's a place, it's a area of safety. Basically, people flooding to cash, people flooding to the liquidity of US dollars, people flooding to the relative safety of just being in cash versus in riskier assets. And that tends to happen when people get nervous. Well, are they nervous? 83% versus 14% advanced decline. So not quite that magic 90% decliner where everything's going down. Usually when you get closer to 90+% decliners, that's more of kind of the capitulation, that everybody throwing in the towel, and that's usually the bottom. Anyone that's willing to sell kind of sells on that day. As far as the bull or bear market, we've been firmly below the 50-day moving average in most stocks. Almost 80% of all stocks below their 50-day, which is an increase from last week, no doubt. But even last week, it was like 65-35. So we're in a bearish market environment, or at least more bearish than bullish. We really were neutral. We were kind of sideways, but that changed in a hurry last week. We'll look at the heat map as well here in a second, but deeply in the red. So here's what I saw and expected out of the market, was that we were in kind of this consolidative pattern. We were in a little bit of a wait and see mode, and the big turning point was here. Whenever you see a really, really big size candlestick, you want to think about it in context. If you have huge bullish or huge bearish candles, well, that's a sign of energy. That means that there's power behind that. There's aggressiveness. There's, aggressive buying or selling. It can lead to further rallies where you come out of a low. It could be an exhaustion where you've just been in a free fall and then you get a massive size candle. It can be the start of down moves where you've been rallying a bit and then it turns down. And that's where we were here. We had rallied for a couple of days and then a nasty reversal. The likelihood that that was going to see more declines was pretty high. Now, did we know that it was going to be followed with another? And then, yesterday we tried to bounce off the lows and that failed, and we're just getting this huge cascading move. No, it doesn't suggest that, but it suggests a few more days of selling. These types of moves are somewhat unpredictable. I don't even try to really bet on them because they're the outlier move. They're the thing that happens the least amount of time. So you just consider yourself lucky when you're bearish. You have bearish trades and they keep going and going and going. But for the most part, I kind of trade for things to be more normalized and then adjust when they're not acting normal. Well, we've gotten a real breakdown here. So again, you'll probably see some rallies mixed in, but you have to be in sell the rally mode from a market perspective. There could be something that changes that, sure. There will be rallies. I don't know when. It could be a few days away, but you'll probably see, big exhaustion type lows, and then you rally for a couple of days. My guess is longer term, I kind of came into this year thinking that the SPX index would trade down to 3,800. I gave that target as kind of what I envisioned. And remember, the S&P was at 4,800. So 1,000 points is not much on the Dow when it's trading in the tens of thousands. But on the S&P, 1,000 points down at some point during the year is what I expected. And that's more than what markets would normally fall in any given year. It's not crazy abnormal, but most years you don't see a decline of 20%. But I kind of said, this is a market. It's going to be fighting inflation. It's going to be fighting raising rates and, QE to QT. We've gone from quantitative easing to quantitative tightening. Valuations are very high, et cetera, et cetera. There was also just crazy frothy material. I look, some people believe in and love NFTs, these non-fungible tokens. I mean, to me it's a sign of bubbles because I don't get it. I'll never get it. I don't understand why someone would pay millions and millions of dollars for a picture of Jack Dorsey's first ever tweet. And they own the rights to that picture and paid millions of dollars. I don't understand the value there. Who cares? Anybody can go take a picture of his first tweet. Why does that have any value? I don't get it. I never will. But nevertheless, that's a sign of like frothy material there and bubbles. I mean, at least in Tulip Mania, you got a pretty flower or something. An NFT, you get a picture of Jack Dorsey's first tweet for millions of bucks. I don't get it. But anyway, 4,800 to 3,800, 20% drop in the markets. I think that was very much within, this was my personal kind of expectations and targets that we would get down to there. And I suspect we're still on our way. We're at like 4,200 in the S&P, probably headed still lower. And just because you set a target of like 3,800 doesn't mean that you really believe it's going to go there and perfectly bounce and nail that number and then skyrocket. No, it's more about what's the direction you think the markets are going to go. Do you think it's going to be a good, strong environment? Do you think that there's a lot of upside, or do you think the market's in a bad spot? And I thought the markets were in a pretty bad spot, and that's without knowing, or there's no way I predicted a war and some other things that have gone against the markets. I didn't even expect inflation to get as high as it has and create the problems it had, but I knew it was going to be an issue and was much too high. So anyway, Nasdaq rolling over. You can see the 20, the 50. It's now down here towards the lows, and basically at those lows as we go into a huge week for earnings. Google, Apple, Amazon, Microsoft, all reporting now. And I don't know how those reports are going to be, but the market seems to be expecting more downside, more deterioration, more selling pressure, that we're going to break these lows. So, if I were playing the earnings, I would have to play them more pessimistically because I think we'll pierce that low ultimately and trade lower, So a sea of red here. There's not a lot of green. If you see little pockets of green, maybe a little bit in healthcare, maybe a little bit more in the energy space, and then a couple of individual names that are in the green. But for the most part, that is bright red. That's an ugly day in the market. So, where do we go from here? Well, I think you've got to take all of these down a notch. We're below the 20 and below the 50. That was already the case, but now you've got this slope rolling over. So this is kind of turning more towards red. Look at the 20. Look at this blue line, just downward slope. So, it hasn't happened yet, but it's going to keep coming down here within the next couple of days and cross below the 50. That's what we call the bow tie. It's kind of a fake out pattern. The 20 crossed above and now right back below. As you bounce, you actually create inverse cup and handles in the market. So yeah, we're now testing the lows. And I'd actually expect a little bounce. And if you wanted to kind of measure the move and say, how much do we bounce? Probably a pretty good one. Remember, in a cup and handle, there's some key characteristics. Number one, you establish a key level. Well, we did that in the markets. Number two, you retest it. We're about to do that. Number three, you bounce, but the bounce should only be about 30% of the size of the cup. So I'm just kind of eyeballing it here, but here's the size of the cup, from the support to that area, and a bounce of 30% would be about right in there. Um, so, recover some of or all of today's sell-off, yeah, probably on the bounce, but then ultimately plunge and go to new lows below that. A lot of people, the reason I love cup and handles is because as they form, they look like they're going to turn into double tops and double bottoms. They look like, a double top looks like this, where you hit a top and then you sell off and then you go back to the top and everyone goes, oh, it's probably going to break down. And ultimately, it could be a double top and you go into this massive downtrend. But do most charts create double tops and double bottoms? No. What actually usually happens is you trend upward and then everybody goes, oh, it's going to be a double top, and then it kind of tests the high here, and that's where they say, oh, it's going to be a double top, and all you get is a little pullback, and then the breakout. And what it actually was it never became a double top, because when you pulled back, you only pulled back about 30% of the prior size and then take off. So here's the opposite. It's the inverse. They'll say, oh, it's going to be a double bottom here. No, as we bounce, it won't likely end up being a double bottom. You'll bounce. The handle will be about 30% of the size of the cup, and you'll probably break down. I make more money betting on them not being double tops and double bottoms than trying to bet that they're going to be some major trend reversal. The trends are sticky and they tend to last more than you would expect. So, weekly outlook, we came into this week, I've got this wrong. I think we came in at -2. I mean, we're getting to the levels where we should bounce, but that's all it's probably going to be. Monthly outlook, I think that's also more over here, and it just makes sense to be more bearish in terms of your outlook here going forward. So, I had those on zeros, but clearly that has changed, and they talked about that in the weekend trading room. All right, so let's talk about some bullish and bearish and neutral trade ideas. I have to say I have a little bit lower conviction level towards a lot of these different ideas, in that I don't know that they're ready right here, right now, but look like things that should do better than the markets or worse than the markets, and ultimately some chart patterns that might kind of play out. But you'll notice it's just a mixed picture. I'm not really focused on one sector versus another. One thing that I did do was some of the bears that I've had in here for weeks, like Roblox and Roku, and last week it was DigitalOcean, DOCN, and all these stocks are just in an absolute free fall. So if you've been trading them bearishly, as we have, then they're fantastic trades. I'm just moving those more towards neutral as a way of saying, time to take profits. This is ultimately why I was bearish, and they've absolutely collapsed, and the sentiment towards them is horrible. And I just don't see the logic in trying to squeeze out the last bit of them. So for me, this is where, again, they can go bonkers to the downside and they can break every statistical norm and do all those things. But for me, it usually makes sense to stop shorting and trying to pile on when they're that extended and that run over. So you should have been shorting them the past few weeks. And ultimately, this is more of, hey, do we take profits? That's the question, is do we just go neutral? I'm not going to buy them either, but do we go to the sidelines, take our money, and move on? Well, we're much closer to that than just piling in now and trying to short now. It's very late in the game. So let's look at a few charts together. I'm going to start with with Delta. And this has got to show me a little something, but we just had that discussion on cup and handles. So here we go. A key level that fails, okay? Everyone can see that resistance. It's obvious. It's obvious that this is where it failed, right? You come back up and you respond to it. So there's the retest of resistance, right? And then as you fall away, this is where everyone goes, oh, it's going to be a big cup and, or pardon me, big double top. You see it? And we're going to go collapsing to the downside, but that's not really what's happening here. What's happening is we've got a 20 crossing above the 50. We've got higher highs and higher lows. We're pulling back, yes, but what is this chart probably going to be? It's probably going to hang in there and perform better than so many other things. So many things are in downtrends or making new lows, and Delta somehow is bucking the trend and trading well over the past few weeks. That is relative strength. So ultimately, we measure it out. 45 is the resistance zone. The bottom down here was 30. The size of the cup is 15 total points. So what's 30% of 15? And that's ultimately where your handle should start to come into play. And guess what? Well, 30% of 15 is $4.50. So as you back off of 45, you should find support at about 40.50, right in here. So a little bit lower, but ultimately that's where you should start to find some buyers. And so around 40.50-ish is where I think, again, we're not there yet. This is why I said I don't feel like a lot of these are quite there, but around 40.50 is where, and that's a zone, that's not an exact price, but that's the general zone where this thing should kind of bottom out, start to turn bullish, start to pivot back up, and give you some opportunity. Pepsi, we've already been in this one and highlighted it to the upside. I mean, it's still working. We highlighted it back here on this dip and actually traded it to the upside personally. But I still think that should be an outperformer. Should go up and through here. It still hasn't kind of cleared the resistance out, but it's in the process of doing that, I suspect. And we should be working our way up into the 180s. And then Occidental, this is an oil stock, and it meets the criteria of the Bollinger Band technique, where you basically have hit the lower Bollinger Band, but you're still above the 50 MA. So you're oversold, but still hanging on to your uptrend. I don't know if this is going to work its way higher, but there are some other factors in play. One that's fundamental that I think is interesting is warrants. Not to be confused with Warren Buffett. And this is the story. So Warren Buffett owns warrants on Oxy, the ability to buy a large quantity of shares at an exercisable price, and the expiration's multi-years off, but an exercise price of like 59, I don't remember the exact number. That becomes a marker of sorts. Now, it's not really anything that drives the stock higher, but ultimately, do I think the stock's going to work its way up and through there, and that those warrants are going to be good for Warren? Do I think that he, in hindsight, in the coming years, is going to be able to exercise his right to buy the stock at 59 and it'll be trading at 80 or whatever? I think that's the case. And it'll probably make Warren a few $1 billion, right? But that's a kind of a key level, and that's where this stock has been trading around and gravitating around. Do we fall way off of there? I don't think so. Do we hang around that level and ultimately trade up through? I do think so. And oh, by the way, Warren Buffett and Berkshire Hathaway have their annual meeting this weekend. And there's going to be a lot of questions about how he's been buying additional Oxy shares. So to put things into perspective, Warren Buffett and Berkshire Hathaway has been buying billions of dollars of this stock in this zone here, even though they have warrants to buy more and to invest even more billions of dollars. So Warren Buffett and Berkshire Hathaway are very, very bullish on the prospects for this company. And I suspect we're going to see it trade into the 70s and 80s. But it's going to require some patience. Twitter we've had on the neutral list, and if you had told me that the stock would stay neutral even with it getting bought out and all these weird things, I'd have said that, boy, that's unlikely. But that's where we're at because the buyout price is only a little higher. So a stock won't immediately trade to the buyout price. Why? Because there's risk that the deal falls apart and the stock collapses back down. So nobody's going to pay 54 so that they can sell it for 54.20, right? Months later. This deal's not going to close for months, and the stock is likely to just stay dead right underneath that level. So if you've been selling volatility, you are in a very, very good spot because the upside is very limited. The buyout price is higher. There's also the fact that they're going to go private potentially. There's probably not a lot of downside because this probably will pass regulatory approvals and so on. Just a great spot to be neutral. So we happen to get that one dead on. FedEx on the bearish side, inverse, cup and handle. You see it. Key level, retested. Okay, we've highlighted this one as being a handle candidate. The handle was perfect. I mean, that's picturesque. It failed right where it should. This didn't turn into a double bottom, and I suspect we're going to break and go lower. For solar, already breaking down, I'd really like to get short this on a bounce back up underneath this breakdown zone. So look at where it broke down from, and I'd love to get short on a small bounce up there, just 75-ish per share in First Solar. But again, suspect that trades lower. And then Garmin, nothing really special here, but just looks like a broken stock for some time. You know, failed break above moving averages there is never a good sign. We'll probably have a nice little swift drop back down to the support here and ultimately break to the downside. US dollar is rallying. Last week I spent some time talking about how I took off precious metal trades in 1 week ago. Well, actually I did the Monday market roundup last week instead of Tuesday. But in that Monday market roundup, I talked about that the US dollar had a big recovery in precious metals, gapped higher and then sold off poorly. And I wrapped up some of those trades. I took off my silver, and those have been crushed. Commodities have been crushed since. So that was, I mean, great timing on the exit there because they're down massively. Now, ultimately, I think they'll probably work their way back, but it's going to be a while and it's going to be a process here in all likelihood for commodities. There was too much money chasing them. It got too popular and a lot of those things. So I was watching for kind of signs of exhaustion, and it certainly was exhausted. The markets generally just continue to trade poorly. We get advanced GDP quarter over quarter on Thursday. The GDP numbers, there was a bank that came out today that said we expect after this GDP number, of 7%, we expect it to go to zero. So they're expecting basically the US to report 7% 1 month or 1 quarter, and then the very next quarter to drop to about 0% growth. That would be a huge drop, and I think it was JP Morgan that came out with that report. So that one was pretty interesting. Earnings reports, huge week for earnings. Apple and AbbVie and Amazon, Boeing, Chevron, Facebook, Google. I'll highlight the large cap tech, Microsoft, Qualcomm. There are probably others, Intel in here. I mean, it's just a huge week for earnings and reports, and every industry is represented. So plenty to keep you busy. A very, very volatile market. I don't have as much conviction kind of towards the short-term trades this week, just waiting for things to look really good and picking my spots a little bit more carefully, because even though the market's now in a more obvious downward trend, I would say it's not at the best kind of price point for entering trades. to profit from that downside move. So it'll require a little patience in picking your spots, I suspect. Hope this was helpful. Have a great rest of your week, and we'll see you next time. Goodbye, everyone.